Welcome everyone to the weekly market review by ATFX. My name is Gonzalo Canete. I'm gonna share with you the key points of this week, just to keep you updated about what was the main things, the most important things we saw this week, and also what was the effect of this data, this news, these events on the global markets. Mainly it's 6 points I'm gonna share with you today. Starting by the main point, the most important one for the last few weeks is the debt ceiling negotiations and how exactly this agreement will affect the markets. Now, we're gonna go into details about what exactly Democrats were proposing, what exactly Republicans were demanding, and what exactly is the deal they got it. But regardless what's the details of that deal, I'm gonna show to you an illustration about how exactly this agreement gonna affect the liquidity on the market like it did in 2011. It means like increasing the debt ceiling gonna allow the government to take liquidity from the Federal Reserve System and therefore from the banking system for fill out the TGA account on the Federal Reserve, which the TGA account is a Treasury General account of the government, the account they use to pay expenses, public expenses like pensions, any other expenses they got in the daily basis, right? By drawing the Federal Reserve System, they're gonna reduce the liquidity on the banking system, as I say, and that's gonna provoke a kind of bearish effect on the market. Or this is what we expected it could happen, right? That's the first point. We're also gonna see the evolution of the potential scenario on the Standard & Poor's 500. We're also gonna go after that to the numbers released by Canadian government in terms of GDP, which was really good, 0.8 over 0.4 expected. What was the movement of the Canadian dollar in reaction to this release? We also gonna jump to the Germany inflation rate release also this week. What was the movement on the DAX and what was the movement of the euro after that data? Just spoiler, the number was good. Inflation rate was lower than expected, so it means like it's dropping in European Union, European area. And now the speculation is that if the inflation rate is getting reduced better than expected in Europe, it means like European Central Bank probably gonna be or go easy with the monetary policies, and therefore euro should cool down on the market, seeing I don't know, like a kind of downtrend on euro dollar, for example, that we're gonna analyze later. What is next? We're gonna also check the oil market. I forgot to mention. Canadian dollar is really linked to energy because it's one of the main reserves of oil in the world. So we're gonna check how this Canadian dollar, commodity dollar, is reacting to the movements of the oil market. Also, I just grabbed for you Brent oil just to check how exactly was the evolution of the price between Canadian dollar and the oil. We're gonna move from there to the NASDAQ, how exactly NASDAQ has been doing this week. We know that Nvidia were doing amazing. On Tuesday, actually, Nvidia break out the new record of market capitalization in 24 hours. It was reaching almost like 200 billions of dollars in new and fresh market capitalization for one single company. And it joined the club of I think it's only 4 companies today in our world, in this planet. Only 4 companies got a market capitalization over $1 trillion. And in this case, Nvidia joined the club this week, which is, honestly speaking, super high expectations. And actually, we will see that by the time I'm recording this video, which is Thursday evening. By the way, spoiler alert, remember, tomorrow, Friday, you got NFP, non-farm payrolls, which is one of the most volatile data you can release in the market. So for sure, tomorrow we're gonna see some movements in SP 500, in euro dollar, by that and non-farm payroll numbers, release of the numbers. But yeah, mainly I want to share with you today what's the levels so far by the end of the week. And first of all, disclaimer on the screen now. Just to remind you, this information has been prepared by Gonzalo Canete, Global Chief Market Strategist, for general information proposed only and is not indicative of future performance. AT Global Markets UK is not responsible for its accuracy or completeness. The view expressed do not reflect those of ATFX UK. It's just mine. Also, this information does not take into account your personal circumstances or objectives and should not be construed or relied upon as a financial or investment or other advice. You should seek independent advice before making investment decisions. Reproduction of this information is whole or part is prohibited. Now, saying that and release any responsibility of my words, now I can speak openly about what's the view on the debt ceiling. I just choose two articles, right? The first one is from investing.com. The second one is from fortune.com, the other website. Here it is. And yeah, mainly it's talking about how exactly they deal with the agreements. This article, if you go to the main source, if you go to the investing.com article, which is titled by Analysis US Debt Ceiling Deal, Doom Biden's Revolutionary Tax Plans. In summary, if you go to the article, what you're going to read is they speculate that this bipartidist deal, which doesn't make all Democrats happy and doesn't make all Republicans happy with the deal, is risking both sides in a way that you will understand. Now, it's basically suggesting that, for example, it's saying like he cannot complete with the promises he did during the campaign in terms of taxes. He was just mentioned, I'm talking about Joe Biden. He was just promising like increase the taxes to the riches and this and that. But mainly going now to the main point, he was proposed 3.3 trillion on new taxes, including raising the corporate rate to 28% from 21% and returning to the top individual rate of 39.6% from 37%. Can you imagine that almost 40% of your incomes are gone by taxes in US? And if you're a company, 28% of your incomes are gone by taxes also. 28%, right? So almost 30%. So all of these promises that he was doing to funding, for example, the IRS army, right, to these tax soldiers to gonna find taxes everywhere, need to be keep on hold because Republicans didn't agree with this. And yeah, just quoting some of them. Very little of this of it was complacent in the Inflation Reduction Act, and nothing was advanced as a part of that ceiling negotiations, Russell said, a senior fellow of the left-leaning Urban Brookings Tax Policy Center in Washington. So the left side is not happy with the deal, but the right side is not happy neither with the deal. You will find out now, because Fortune was mentioned also that this new bipartisan efforts from Democrats and Republicans will be needed into Senate to overcome objections. So it still need to pass the bypass of the Senate. And it says the conservatives warned of possibility of trying to out McCarthy, the one who is representing the Republicans, over the compromise. So speculation said that McCarthy could lose support from Republican Party. Even Donald Trump was the main top Republican candidate to the US presidency saying about this. He say it is what it is. That's what Donald Trump say. It is what it is, which means, like they mentioned here in this article, held his fire. So he didn't want to go. He didn't want to be bad. He didn't want to go bad and say, well, it's not okay. No, he was saying it is what it is. Okay. He said Democrats against ensure passage, leading the tally of 71 Republicans backed their majority and voted against it. So 71 Republicans were voting against the deal. While, let me check the number on Republicans, because Republicans vote against the deal too. 46 Republicans vote against the deal. It says some Democrats were also incensed that the White House negotiated into the deal changes to the landmark National Environmental Policy Act and approval of the controversial, here we go, Mountain Valley Pipeline Natural Gas Project. So Republicans want to move this project forward. Democrats stop the project of the new pipeline natural gas. Actually, they even shut down some of the other pipelines they got it available in US. Because of this deal, Democrats will accept this pipeline natural gas project, which they say here, like a Joe machine, they are, but many others oppose it is unhelpful in fighting climate change. So Greta Thunberg does not agree with the pipeline project, but it's part of the deal to approve the increase of the debt ceiling in US. Now, here is the important points, here is the key points that are going to affect the market, and this is the most golden information we're gonna get from the debt ceiling. Trust me, it's a lot of equity market response will depend on the real data and on the real-time data on the economy and beyond the interest rate effect. Treasury, attention please, Treasury will be draining deposits from the economy, the opposite of the first 5 months of the year. Bleed says. The reason is that Treasury is selling debt to raise cash and not spend it, but putting the deposit at the Fed. More so, the Fed is not, in effect, financing the increase in borrowing by virtue of its QT. Translating, QT is the quantitative tapering. It means reduction of liquidity by the Federal Reserve, reduction the balance sheet of the Federal Reserve. So they're saying basically here, in the contrapart of the opposite, what happens the first 5 months. This is not an increase on debt ceiling that is gonna funded by cash available by budget for this proposal. It's actually gonna increase the debt ceiling, taking cash from the Federal Reserves available at the moment. Those ones who are available also for the markets, those ones who are available for banking system. So it means they're gonna drive the Federal Reserves, and therefore market gonna get less cash available to keep feeding the Wall Street businesses. Okay. And this is important. Why? Because mainly because of the deal, expenditure reduction and deficits adjustment passed by less expenditure by the government, but also refilling the TGA account with the new funds approved by the debt ceiling. Just to keep in mind, less money available in the economy and also less expenditure by the government. It means depression for the economy. I mean, if after this deal the recession is not here, knocking the door, is because it's a ghost, basically. This guy, Macro Alf at Twitter, at MacroAlf, published a kind of schedule or diagram showing to you how exactly it works and why this bonds issuing slowly to increase the TGA doesn't reduce the balance reserves, but deficit spending doesn't drain the reserves. So in the second example, you can actually see how exactly by refilling the TGA account of the government, the liquidity on the market gonna drop, and then it's gonna affect the banking system reserves. You can see that's minus 100 as example, right? This is not a freshly new emission of bonds. This is an emission of bonds taking the cash from the Federal Reserves available at the moment for the whole system. Now, what was the reaction of the SP 500? Yesterday, it was super good reaction. We finally broke out the 4,200 points on the Standard & Poor's 500. But today, Thursday, that number is dropping again. And if you take a look on the chart, you will see that actually, I'm gonna just share the whole screen with you. Actually, we didn't pass the 4,200 points on the SP 500 since summer 2022. You see, July, August, it was the last month we were just rising above these levels. Since then, anytime we go to 4,200 points, the market is dropping. IS Mark has a possible scenario, even 4,300 points, but as you can see, the correction is there. And just as a reminder, tomorrow again, NFP, non-farm payroll, is gonna be released, and is one of the top volatile data you can release on the market. So after that number, we're probably gonna see some movements in the SP 500, either to rise to the 4,300 points or dropping below that levels of around 4,200 points on SP 500. Now moving forward, I want to also share with you what was the movements linked to the GDP of Canada. Canada released the GDP. It says like the Canadian economy grew by 0.8% in the first quarter of 2023, bouncing back from the stall in the previous period and well above market estimates of 0.4% expansion. This is super good because it's better than the expected, right? 0.8% of growth is better than 0.4% expected. But if you take a look, I took for you from Trade Economics what was the evolution of the growth rate in Canadian economy, and you can see that it was last year it was between 0.6 to 0.8, and yes, the last quarter of the year 2022 it was 0%. So we are improving because we are in 0.8% the first quarter of 2023, but still we're coming from zero. Okay, so expectation was 0.8. We got 0.4 was expectation. We got 0.8. Super good, happy days. But it doesn't mean like the economy is growing crazy, right? I mean, it's almost keeping flat the last year compared with the last year. Now, what was the reaction of the Canadian dollar? We got on the screen also the US dollar against Canadian dollar. So the movement seems to be dropping since then, which means like good expectations, but still dollar is Canadian dollar is rising over the dollar. That's why we can see that it's dropping to probably close to the levels of 1.3525, which is, by the way, the 200 period moving average right there, and the 50% of the FIBO on the channel done since third quarter of 2022 until now. So we're probably gonna see that or expect that Canadian dollar gonna still keep reinforcing itself against the dollar. So it means like we will see a downtrend on dollar against Canadian dollar most likely. Again, once that levels are reached, probably the options or probabilities of spike up or a change in the trend are high. I mean, basically on the chart you can see that it could be a kind of pivot point, and then we will face a new uptrend on this pair. Interesting to mention also the correlation between Canadian dollar and crude oil. You got an inverted US CAD, which is like CAD US, right? With the crude oil. So if we follow the price of crude oil, anytime the crude oil is rising, the Canadian dollar is getting stronger. This is interesting. Why? Because the the oil actually were dropping from we come in from $88 kind of support. We lost that support by the end of the 2022. Since then, we have been moving between $88. I'm talking about Brent oil, $88 to $70 more or less. And as you can see, that's probably the levels we are reaching this week, around $70 on barrel on Brent oil. And once we're there, we can expect like especially consider the movement of Canadian dollar, it could change. It could be again another support, important support around $70, and rise again back to the levels of $78 or $80 per barrel from there. Okay, if not, if it's breaking out the support of $70 that has been keeping for the last more than 6 months, we're probably gonna move to 65.50%. And that will be a uptrend on dollar Canadian USD CAD, which is good because it's also being it's correlated with the charts we are observing on US CAD. German inflation rate, also another numbers we want to review today. It's the inflation rate published by Germany economy. So German's inflation rate declined 6.10% in May from 7.20% in April 2023, and below the market expectations of 6.5%. Again, good number, very positive data, macroeconomic data this week. Because Germany, who was expecting to get 6.5% inflation rate, is in 6.10%, better than expected. So the expectations of a hawkish European Central Bank fade and Euro USD deflates to minimum 1.0660 more or less. You got the charts on the screen. I'm sharing with you the screen, and basically if we keep going in this trend, we probably gonna be around 1.0550, 1.06 in the coming hours, because we got the non-farm payrolls tomorrow, Friday, and also between Friday evening, even Monday, we can see that we are getting close to 106. Amazing. I was short in euro dollar since last year, and I closed the positions in April. Anyways, keep going. DAX. You got on the screen also the evolution of the DAX index, the main selective index in Germany. It was rising really good and nicely, and now considering this inflation rate, it's a positive thing for from German equity. Why? Because with this inflation rate, the need to keep pushing forward the interest rates in Europe it's gone, and therefore the monetary policy is going to be more flexible. That means more liquidity is available for European stocks, and therefore we could expect that again German equity, in this case DAX, will break out the top highest records. They got it by 16,300 points. But pay attention, because we got the moving average there. We also got a three uptrend impulses there, and every single one of them seems to be weaker and shorter. So therefore it means like the force of buyers are getting lower and lower. And considering the SP 500 and also considering the movement we have seen in dollar, maybe this means that a drop in the SP 500 due to the debt ceiling agreement that I explained already, for sure gonna grab down the European markets as well. And yes, ending with NASDAQ. This is the last market I want to share with you today. Starting by the amazing news, you got this William Clemente in Twitter, which published this, the massive rally done by Nvidia this last Tuesday. Almost $200 billion of new fresh market capitalization, above the Amazon, Apple, Microsoft and Tesla in market capitalization daily. We got the top records of what was the maximum market capitalization done by every single of these stocks, and Nvidia basically broke up all these records. 200 billions in new equity, new cash, right, collected by this company on the market. Amazing. It was pushing up the NASDAQ 100, the index, super strongly this week, but we can see that today, Thursday, it's already reducing the speed. It's already taking some steps back, right? We are back to the levels of 40,700 some points there. We mainly probably got the target in 15,000 points in NASDAQ, but if we see that again tomorrow, by the end non-farm payrolls, NFP, if the data is not so good, maybe we're gonna see that it's dropping. Even if the data is so good in non-farm payrolls, maybe it's the opposite. If the macro data is so good in non-farm payrolls tomorrow for US economy, it means like the Federal Reserve gonna still be we're gonna be in risk that the Federal Reserve maybe keep pushing, like Bullard said, quarter of percent, 25 basic points twice this year, and therefore maybe the equity market gonna depress again and go to the 13,900 points on NASDAQ, which is a really good levels if you are considering to buy NASDAQ. Hold the position and just wait for these levels to increase your position on NASDAQ, okay? And if you see the 15,000 points there on NASDAQ, could be also a kind of goal or target to drop off, okay? Well, that was all. I hope you enjoyed this first weekly market review. It was the first one I have done for ATFX. I hope you enjoyed. Let me know in your comments if you like it or not, and also subscribe if you really like this, to receive notifications anytime I upload this video, which is something I want to do on weekly basis, okay? See you next week and enjoy the financial markets. Bye.